Good morning from Prudent Prosperity, Thursday, July the 3rd. Here are 5 things you need to know today. Number 1, U.S. stock futures took a breather on Thursday as investors counted down to the release of the June jobs report to test expectations for the pace of interest rate cuts. S&P 500 futures traded broadly flat after closing at an all-time high on Wednesday. Contracts on the Dow Jones Industrial Average and on the tech-heavy Nasdaq 100 were also little changed. Number 2, the House of Representatives is barreling toward a final vote on President Trump's Big Beautiful Bill, with Republicans increasingly likely to send a massive piece of legislation that will be felt across the economy for years to come to the president's desk. Approval is far assured, but White House and Republican leaders inch closer to victory Thursday morning after a pressure campaign, and yet another all-night session on Capitol Hill appeared to satisfy Republican holdouts concerned about things like the multi-trillion-dollar price tag and healthcare cuts. Number 3, the U.S. has removed some export restrictions on chip design software to China, according to chip design software maker Synopsys. The company said that it received government notice on Wednesday that the restrictions set in late may have now been rescinded. Synopsys is working to restore access to the recently restricted products in China. It said shares of Synopsys are rising 5% in pre-market trading, while those of Cadence Software, which reportedly also is working to restore access to affected customers, are up about 6%. Number 4, shares of DDOG are surging 9% in pre-market trading after S&P Global announced that the software firm would join the S&P 500 on July 9th. A spot in the index opened following Hewlett-Packard Enterprise's HPE completed acquisition of fellow index component Juniper Networks. Shares of Robinhood Markets are nearly 2% lower after they surged by more than 6% yesterday on speculation the trading platform would replace Juniper Networks in the index. Number 5, the June jobs report showed the U.S. labor market remained more resilient than anticipated in the final month of the second quarter. The U.S. economy added 147,000 non-farm payrolls in June, more than the 106,000 expected by economists. The unemployment rate unexpectedly fell to 4.1%. Economists had expected the unemployment rate to move higher to 4.3%. And that's it for today.
If any of today's insights sparked a question or made you think about your own financial journey, don't hesitate to reach out to us. Let's take your next step together, strategically and confidently. And always remember, stay prudent, stay prosperous, make it a great day.